Welcome to Simplified Profits, ladies and gentlemen. This is Anthony with over 23 years of experience in the market. We're going to do a real quick rundown of the charts and a little bit of commentary here. We're also going to look at some options data, kind of show us some of the big trades as far as happened on Friday. So real quick, let's just go over SPY. We've been saying since last week, market looks really strong. And of course it continued that. We said it could easily hit 550 as far as SPY goes, and we could see that as early as possibly next week. That would put us up another percent, right? That's not too hard to see looking at the overall strength in the market. Weekly chart, let's jump to that real quick. Once again, looks strong. We looked at it last week, and I mean, the market is, I think it's got some people in almost like an awe because it's been crushing it really lately, ladies and gentlemen. It looks strong, and it doesn't look like it's giving up any strength. Every little bit of pullback's getting bought up. Usually we would see so many more swings throughout the year than we do so far. So far, you've had one swing, two swings to the oversold position, right there. Hit oversold beginning of January, rallied up 12% in 3 months. Usually we definitely see a couple pullbacks from then. And then we've seen one in April, and it's rallied up another 10%. So usually by now, we are mid-year, we would have already seen 4 pullbacks most likely to the oversold condition, which would have really, as a swing trader, that's what you want to see. You want to see swings in the market. And you take advantage of those on the leverage versions of the ETFs, and you really crush it. Now, what we've been doing lately, ladies and gentlemen, and I think it's actually working out great. Kind of glad this has happened because we've got bored because there wasn't enough swings. So, and don't get me wrong, this swing right here, that did hit oversold. We talked about that in the last video. At the bottom of that wick, right around that 50-day moving average, the stochastics, watching it live, was literally right around 20. But then it rallied and closed up, and it kind of just whipsawed the stochastics on that. But if you were watching it and paying attention, if you got alerts set up to where if it hits 30 or below, which we talk about, which really oversolds the 20 level, but we set alerts for 30 because we want to see it when it gets close, just in case it doesn't hit it. So those were the swings we've traded so far. Usually we're way more swings in the market, and we're capitalizing on those swings. But since there hasn't been, we've been watching everything from the 1-minute chart out to the hourly chart, and really just swing trading on some options. And it's working out really well. Now, I'm not going to get into that yet. Just because I really prefer people to learn the basic fundamentals of swing trading, the very simplicities of it, at least how I do it. I don't know how other people out there do it, but it's in the book Simplified Profits. If you learn how to do it on the daily chart and become profitable, then you can take your risk and your chances with options. Options are very risky. That's why I don't really recommend them to many people, because you got to have that confidence in what you're doing to kind of filter out any emotions, because you can see big swings up and down in your account, and it could get quite an emotional roller coaster for you. But if you can, and really what kind of we've been doing, really the 3-minute and the 2-minute kind of been our thing. These swings right here, you'd be amazed at how profitable they can be for you. Just get a trend, have a set of rules. We have a set of rules. Never trade the first 30 minutes in the market. Many other things. Suggest picking up the book Simplified Profits, learning how to read a stock chart, learning the basics of just day trading, swing trade, not day trading, swing trading, but swing trading, where it may take a month or so. We'll also look at some scans here as far as some oversold stocks here in a minute. But SPY once again is looking strong. We haven't seen many swing trades, so we're just taking advantage of the swings on the day by day, which I think is, I'm glad that is actually transpiring like that. Anyway, Dow Jones has been the weaker out of them. It kind of bounced up to the 20-day and looks like it's pulled back a little bit. You see the moving average and stochastics are kind of retreating. This indicator right here, which sometimes you don't see on my chart, it is something I use. It almost aligns with the 3-day and the 5-day moving average. So if you look at the green is the 3-day and the 5-day is the red. Good short-term moving averages to watch when one crosses over the other. Kind of gives you an indication of a trend, but that could easily snap up, ladies and gentlemen. You never know which way the market's going. You just got to have a good strategy that kind of works out. I'm not going to go over all that now. You can see some other videos on the channel, or just once again pick up Simplified Profits. It goes over the most simplified strategy I've came up with over 23 years. All right, this is gold and silver both last week, which I've seen some big silver calls get bought up. We'll look at here in a minute, but as you can see, it's hit the oversold area right here, kind of rallied up a little bit, and then we had a drop off there, and it's kind of trading sideways right now. Had a you could be working on, always look for head and shoulder patterns, stuff like that, and it could be shaping up for one, but who knows. I think gold will go higher just with these other countries, just basic supply and demand as far as everybody's stocking up on gold. The BRICS currencies, they're talking about backing that with gold. So if another currency comes out as a good gold standard, definitely be good for the price of gold. So keep an eye on that. I mean, we were talking about it looking like it breaking out in strength back here a while back, 2 months ago. Actually, it's been 3 months ago, 3.5 months ago. Small caps, I stay away from these, especially in a high rate environment. Don't really like them. I like mega caps when I trade, just because they're safer, ladies and gentlemen. You want to keep your money. You want to have very calculated risk when you take them that are as safe as possible. Small caps, not a fan of. Got overbought here and basically pulled back. This has really had more swings than anything else out there. Since January you had 1, 2, 3, and realistically it's getting on the 4th. We'll probably test that 200-day moving average if I had to guess, which by the time it does could be the 195 level, and we'll see what happens from there. As always, anything under the 200-day moving average, we're out of it. Like this cannabis ETF we said last week, when it crossed under the 200-day moving average, as much as we like that sector for growth in the next 10 years, until these companies really get their money together and fundamentals together and are making money, we said our favorite company was this one, and they are crossing under the 200-day moving average as well. So yeah, I like the sector overall, but once again, until it, these swing trades were great, but that's why you never fall in love with anything, because it don't matter what it is, ladies and gentlemen, they could pull back. And look, if you fell in love up here and didn't get out when it crossed under that 200-day moving average, you took about an 85% loss over 2.5 years. That's not a good loss. It's a horrible track record. So once again, we say it on every video, 200-day moving average. Pay attention to it. Don't hold anything or touch anything below it. Now, that's just my opinion, not financial advice. Do what you want. You may have a strategy where you just buy everything under the 200-day moving average because it's pulled back so much and you're hoping for it to rally back up. People do that. It's nothing I would personally advise anybody to do. Just my opinion. Triple Q's been killing it. Another all-time high out there with SPY. Weekly, just huge I mean, bullish engulf looking candle there. I mean, this thing will probably break 500 here soon. There's just so much strength out there in the market and so much cash sitting on the sideline. And it's crazy because everybody, you know, the market's not lining up with the data we get. It's not lining up with the economy. But there's a lot of people out there making a lot of money that want to put money to work. So you're always going to have the stock market moving. And there's not really been much shaking that out. Silver hit oversold. Kind of use that 50-day moving average for support. I would expect that to rally back up. I think, you know, just I'm sure gold will follow with it as well. And I'll show you, well, actually we may not. I'll see what came up. Thursday was the big call buy I seen that stuck out. We'll see what happened Friday. I don't remember if I seen silver on Friday, but I'd say whoever put money to work on Thursday in those option contracts, I think somebody bought out about a month, and I think they bought $33 calls, which was really high, but really out of the money. But you know, sometimes you take those risks, they pay off well. Semiconductor ETF looking strong as crap, ladies and gentlemen. I mean, this market is showing no signs of weakness and no signs of really giving up any swing trades. Like I said, every little pullback's been bought up. Look at that weekly chart, is ridiculous. I mean, what in the world? That is just beautiful. Like maybe I'm a little too fascinated with the market, but that's your yearly chart. And if you would have went heavy in this in 2010, I mean, you'd be up 1,500%. That's just crazy. Weekly chart, beautiful. Let's look at the monthly. I mean, I think me, along with probably everybody else, calling pullbacks right there, just because that double top on the monthly, which it did pull back, and then it looks like in, what was that? That was November of last year. It spiked back up. And I even said, once it breaks that double top on the monthly, this thing will probably run to 250. Go back and check my videos, and it has since ran to 265. 70% basically since then. What a crazy. And if you would have been in SOXL, so that was November. Charts on these never look the same as far as your leverage version. That's why you always trade based on the regular version ETF. You go back to November. Okay, yeah, that's November of last year. If you would have got it in the beginning of that breakout, you'd be up 170% in 6.5 months. That's really good gains, ladies and gentlemen. That's why we swing trade ETF, leverage ETFs based on the regular ETFs, because that leverage helps you compound interest so much. Went over SPY. Let's look at oil. So we came out, might have been last week or so, whenever it dropped under the 200-day moving average, talking about how that's a bearish sign for oil. And then it kind of rallied back up over the 200-day. Looks like it's found some resistance on that 50. And it's going to, I don't know if it'll hold the 200-day or not, right? It may struggle on that 200-day and break back down. I know it's an election year. They want to keep oil low. You can see these highs are getting lower, right? And the lows are getting lower. So if I had to guess, if I had to put a projection out on oil before the election, we're probably going to see it back in the 60s. All right, there may be some swings up and downs by then, but it's nothing that looks bullish to me. It's setting up almost kind of a downward trend there. So I would expect, and I could be wrong, this thing could shoot up to another 10% up to the 80 mark. But if you look at my future or my previous projections on it, we've called about every swing on it. And I'm not really bullish on oil. Same with biotech. It's actually surprising me that biotech is starting to trend sideways and up a little bit with rates where they are. Not looking like they're really going to come down much lately, which kind of kills any type of buyouts, mergers, even though a lot of these big companies are cash strapped. But then again, this is a sector that has been still beaten down still 50% from its highs in 2021, which was kind of COVID highs, and it's kind of fell back down to pre-COVID levels and just kind of trending sideways. So I'm not really, you could swing trade LABU, which was the leverage version of this, on the oversold buys, but just be cautious. Watch the 200-day. Not really a hot sector right now, and looks like oil exploration and production ETF is trending with oil, which we said is a downward, lower lows, lower highs, and it's breaking the 200-day moving average. So nothing I would be really putting money to work in there. Like I said, lately it's been so boring, which I'm kind of glad, because I'm really starting to like day trading. It's kind of we've been day trading based on some of the shorter term stock charts, and I don't know why I haven't done it a long time ago. Mainly because I was having good swings every year in the market and it paid off well, and I'm not a greedy guy. But anyway, let's take a real quick look at some option data. We can see on Friday, very big high edge buy orders, meaning it's on the ask or above the ask. Had about a 2 million premium and some puts, and that is out August 24th. So, that's 420 puts. So they're expecting to drop. Definitely got some money on it. $2 million block. And you got a $5 million block basically here. But you do have some bullish ones in there as well. Let's look at the overall market and these are some of your biggest trades. You can see they were selling puts. So if you look, selling them on the bid. That's 2 billion, ladies and gentlemen. $2,700,000,000 worth of puts were sold at 89 cents on the bid, and that was for August 16th, 470. So nobody can really watch this data and really know, because there was a ton of bullish. Oh wait, that's okay. It's IBM, not IBM, but that's the market. IWM. Let's go here. So these are some of the biggest. Let's look by premium. So Nvidia calls, those things are still flying off the market. All right, you got January 26, 115, $18 million premium. SPX calls, Tesla calls, somebody's putting some money to work in there, $8 million. So those are some of the big flows. As far as, keep in mind, these are all above ask or on ask, so they're spending money on them. But that is it, ladies and gentlemen. If you got any questions, any feedback, just leave it below. Otherwise, make sure you subscribe.